So it depends. I'll talk about it within the metrics. If you're looking at like a short-term option sentiment, social sentiment, you're planning on holding it maybe for like a week, a month, something in that range. I always say like about 90 days to expiration is my sweet spot. Like I don't like to do anything really shorter than that unless I'm really, really sure about something. And even then, I almost always regret doing something a month or whatever. You just have Theta Decay, which is like the time value. It's just too significant. Like your margin of error is just way too small. Like I'd say if you can't buy it for at least 90 days, like I wouldn't buy it at all. That's just how I feel. But I also like doing leaps often too. And that's a totally different strategy. And the way that I look at that is it's like, oh, like I think this stock is going to grow. I like it long term. It's cheaper to own these leaps than own the stock, and I can get more exposure to it. And like leaps, a year, I would say, is what I look at. Anything more than that, you're probably overpaying for the growth. But those are the two different strategies. Short term, and I would look at about 90, and then about a year for a leap, for like a long-term trade that kind of has high upside breakout, low downside breakout, high profitability, high growth. That's the kind of profile you're looking for there.
Stay away from the daily and weekly options.
Oh yeah, like the play. Anything less than a month, I think you're just like, I don't consider myself to be a good enough trader to play with those things. What sector is the best for options too? That's a good question. I mean, I wouldn't say there's a best sector. I would say that like one of the reasons option sentiment runs lower in things like real estate and finance is like high dividend stocks. It doesn't really help to own the options because you don't get the dividends while you're holding those long-term options for that. So like those are the ones to avoid. I mean, tech is the best to own options on. Like biotech, like I said, if you're feeling particularly risky. I mean, tech is the best thing. Like tech has the highest growth rate. If you're just using Prospero, like I don't think anything with less than 60 growth you even want to buy an option on because you're just not getting paid out on. The risk that you're taking by having something that expires in a certain amount of time is only worth it if that company can potentially grow a lot, if that makes sense. So even more than the sector, I would say tech is the sector that you want to do. But even more than that, I would say anything that's above 60, even above 70 is even better. Those are the ones that are potentially exciting opportunities. Also a smaller market. I'm assuming that's market cap. And no, I wouldn't say it's better. Like I would say that it's riskier. Again, that kind of gets into like what we're talking about in terms of different expirations, different risk profiles. Like the bigger the risk, the bigger the reward. But I would say like for a lot of small cap stocks, it is pretty risky and I am very careful when I'm doing market caps less than $1 billion. Like for anyone that less than 5 years of investment experience, I wouldn't recommend doing options on anything less than $1 billion market cap.